You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Hi, everyone, and happy last day of the month as well. Already the end of November, and I hope everyone had a good session as well. If you did trade in the US markets last night, although really it looked like there wasn't really too much on, but I hope everyone is going really well. And thanks for joining us to all the LCMS Traders Club members who are catching the call live as well. And if you are watching this on YouTube, which is the delayed telecast, if you'd like to get into the club, please just visit the Jindal Thai website that's within the video itself at the bottom. And a quick introduction to anyone that is new as well. We've had a few new members come in as well. And a quick introduction here as well. So this is the currency call presented by Forex Trading Asia. And we do this call every Monday to Friday at 11 a.m. GMT +8. And it is episode 429. And the currencies we analyze are as follows. So Monday, we do Aussie and Kiwi. Today, Tuesday, we do the Euro. We do the pound on Wednesday, yen and gold on Thursday, and then Fridays we do CAD and crypto, specifically Bitcoin and Ethereum. And this currency call is where we discuss the market economic updates, the key support and resistance levels. We discuss trade ideas and of course much more. And the currency call is a place where it is going to be very beneficial to long-term investors of FX, Forex, and also short-term traders as well. And here we will go through what could move prices, the possible trade ideas, and we'll also highlight the potential targets and the risks. Finally, talking risks, this is a disclaimer. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. And feel free to ask questions as well during the call. We are here to help. But just to kick things off, we do have Gimme here just to discuss. Jerome Powell is speaking later today at 11 o'clock in the evening, GMT +8, and Gimme will just go through those details and what we anticipate. So over to you now, Gimme.
Alrighty, Scotty, thanks. Okay, so Jerome Powell will be speaking, will be testifying before the US Senate, and his testimony speech script is already out, So the one thing, well, probably only one thing that we should be paying attention to is his view on the Omicron variant, So this testimony will be on coronavirus and the CARES Act, The CARES Act is basically the, what does it stand for again? Coronavirus Aid, Relief and Economic Security Act, So this was actually carried out and signed into law, by President Trump, the previous president of the US, in response to the pandemic. So, they will have this whole testimony from time to time. I think it's a monthly affair or something like that, So it's actually to, to see how the CARES Act, all the help, the assistance that the government, is providing the citizens are actually working out for them, whether or not, there's a revision required and things like that, So anything COVID related, yes, you will have to pay attention to, So specifically Omicron. So based on Powell's speech right now, this is what it's Omicron related. The recent rise in COVID cases and the emergence of the Omicron variants pose downside risk, to employment and economic activity and increased uncertainty for inflation. Downside risk to employment and economic activity, meaning sadly, we may actually be seeing the employment side of things and the economic side of things weaken because of this emergence of Omicron, And of course, increased uncertainty for inflation. So inflation may actually go way higher, okay, way higher than what the Fed has actually anticipated, okay, as of before the discovery of Omicron variants. Now, keep in mind that the Federal Reserve has always been, highlighting that inflation is transitory. Do not worry that much. It's going to come down. Eventually, it's going to come down to our 2%, 2 to 3% target, and remain there sustainably and things like that. Okay, so the most recent, I would say, forecast or projection, okay, by the members of the central bank is that, next year we're likely going to be seeing inflation tone down a little, okay, but that was actually before the discovery of the Omicron variant. Now, with this Omicron variant coming in, okay, they may actually have a change in their view. Okay, it may not be, once again, depending on how Omicron turns out to be, okay, how the whole saga unfolds, the central bank committee members, they may actually be revising their whole thing on inflation being transitory. Okay, so greater concerns about the virus could reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chain disruptions. So it's straightforward coming from Jerome Powell, okay, that this Omicron it can actually potentially have a negative impact on the so-called substantial further progress that has been met at the moment. Okay, so more things will be shared by him, okay, tonight, later at what's the time again, at 2300 GMT plus 8, okay. After going through this whole script by him, he's going to be questioned by the members of the Senate Banking Committee, okay. So we will definitely be hearing quite a lot of things, Omicron related from Powell, okay, for tonight's meeting. Okay, I'll be sharing with you guys the live stream link and the link for this testimony and things like that. Okay, and for what it's worth, okay, Janet Yellen will also be joining in as well, the Treasury Secretary. Okay, she's also the previous central banker central bank chief for the FOMC, okay, the Federal Reserve. Okay, but nonetheless, she can no longer be, she can comment on monetary policy, but it's not as reliable as in the past anymore, okay, because she's more at the fiscal side of things right now, okay. She's a Treasury Secretary, so she's likely going to be keeping her comments, her remarks strictly on anything fiscal related, specifically this CARES Act, okay. So I went through the this speech script by her, okay, this morning, and I don't really see anything crucial to pay attention to right now. Okay, I'll be sharing this link as well. So if you guys are interested in knowing more about the CARES Act, what it does and things like that, how much are they giving out paychecks to the military and things like that, then you guys can just read it out. Okay, so as for trading wise, all right, can we actually be expecting moves later at 2300 GMT plus 8? Okay, the answer is yes. All right, because if Powell is going to say that this whole Omicron variant will have, apart from reiterating that the Omicron variant will likely have a negative impact on employment, on inflation and things like that, then it depends on what kind of details it's going to provide us with, okay? Because remember, the Federal Reserve's quarterly economic projection materials actually showed that we can actually expect rate hike next year, all right? In fact, the market was actually pricing in 3 rate hikes from the US Federal Reserve next year, 2022, okay? And as early as first and second quarter of 2022, okay. But right now, I think it was yesterday or a couple of days ago, I was reading somewhere that because of the discovery of the Omicron variant, the market, okay, quickly sort of shifted back their whole timeline for the first rate hike from the second quarter to the third or the fourth quarter or something like that. Okay, so there is definitely going to be an impact. So for yesterday, I think like what some of them were actually mentioning, okay, the market was pretty dead, pretty wasn't trading in a clear direction. Okay, we see ups and downs, whipsaws and things like that. Okay, so personally, I feel that the whole panic sell-off from last Friday has pretty much come to a halt for the time being, okay, until any further news on until further news on Omicron variant has been released, okay. And guess what? Okay, I think it was yesterday that Pfizer's CEO actually came out. He was actually speaking in an interview, okay, and he actually mentioned that the Omicron vaccine can actually be expected to be manufactured in 3 months' time. Okay, that's actually quite a I would say that's the first optimism coming out from this whole Omicron saga. Okay, nonetheless, we'll have to pay more attention to how the saga unfolds and things like that. And because of that, I guess you guys pretty much can expect what I'm going to say next, which is to keep your trades short term. Okay, short term. Okay, because if you have been selling risk currencies since last Friday, and then right now if they're like optimism coming out from the pharmaceutical companies, Pfizer, Moderna, AstraZeneca, and things like that, Sinovac, Novavax, whatever, then there's hope, right? There's hope that we can actually curb this whole Omicron outbreak sooner than expected. Then it may actually lead to, we may not be seeing another round of lockdowns in countries around the world, right? So that can actually lead to optimism. Nonetheless, we just pay attention to the news and see how it goes. All right. So exactly, fingers crossed. So any updates on things like that, I'll be sticking my face on the screen most of the time for the next few weeks. Okay, because I really need to get the fastest news release from Bloomberg and things like that. And I'll update you guys again if there's any changes in the saga. It can be Evergrande, it can be COVID, it can be Omicron, and things like that. All right. So with that, just keep our trade short term, and I'll see you guys again tomorrow. All right. With that, I'll hand it back to Scott.
Before we jump to Scott, Kim Hong, so with all the analysis, what do you think is going to happen to the dollar? I mean, Scott's going to tell us about the dollar index, but what's your view? Are we going to see dollar strengthen, weaken, sit there, do nothing with this whole testifying and Omicron?
For now, I would say a slight weakening in the US dollar. Some would call it, technically speaking, some would call it a pullback, a retracement, and things like that. But yeah, slight weakening on the US dollar because of the Omicron. And Powell has already made it clear that this Omicron has a potential negative effect on employment, US employment, and US inflation as well. Okay, and still we have to see how hear what he has to say tonight before we can have a clearer view of where the US dollar will be trading to us. Yep.
And bear in mind, it's not just tonight's testifying. I mean, he does go on for a couple of nights as well. So we will see some impact tonight, and probably will last a bit. And then after that, again tomorrow. And then through that, we have non-farm payrolls as well. So, okay, we have the panel here. Kim Hong thinks that it's going to weaken in the maybe short term, medium term. Let's see. What do you think, Scott?
All right, thanks, Jin, and thanks, Gimme, as well. And look, guys, just to go to the chart here, Gim's really presented some decent points to consider as well. It's almost like Jay Powell has sort of started things playing out already. They've sort of gone, okay, we know things are a little bit heated, and the Omicron variant's been quite timely, in fact, so that they can hopefully just cool down concerns that the transitory narrative of inflation is, correct, and that things are okay and they don't need to start raising rates too fast. And frankly, it does sort of look like the US dollar is getting fatigued here. Just with the price action, it really couldn't rally much last night, and it was a situation where it was a bit of a fake out. It was a bit of a bull trap, in fact, and really looked pretty nice, even on the 4-hour time frame there, where it pushed, and I'll just zoom in, where it pushed above 96.30 or so, and got as high as 96.41. Still wasn't enough now, and just to go down the 1-hour time frame, you can see that Recently, we saw yesterday where it did have a small bounce there at 96.15. We're below there now, and we've filled the gap that was made on the open yesterday. So that's happening. Then again, we've got that 96 to deal with. And then if that starts breaking down, it's definitely looking like, this week we could see a little bit of US dollar weakness. So, and just to go to the daily time frame, just to sort of paint a picture on the next level. And we really did see this situation where the US dollar really went for a bit of a run, and even, back down to, 94.70 or so. Just looking back is something to sort of pay attention to. That's obviously going to be quite a fall again. And, we'll offer some opportunities, even if we get below 96 and we hover around, the 95, 40 level or so. But just looking at the news now as well, and like was mentioned by Jin and Kim too, there is a lot of testimony that's taking place, a lot of FOMC members that are speaking too. But typically what's happened is that Jerome Powell has been pretty to script in regards to really trying to settle markets as well. We've got the consumer confidence out, the CB consumer confidence for later tonight. That's 2300, 11 o'clock tonight, GMT +8. GDP for Canada is really the big thing. CPI, very likely it's going to be well and truly in line with that for the euro. And it's really just that reaction with the US dollar. And if there's any surprises, or if not, that breakthrough 96 is probably quite likely. And then we did talk about NFP last night in the live call. That video has been uploaded in the trading chat, so check that out. But for, even for tomorrow, again, it's, for the US in particular, we do have, the ADP employment change going to be interesting, more testimony, and we'll just see what markets want to do here in regards to the updates on that variant of COVID, and whether or not, something that I heard in the news early this morning was they don't really know the severity of older people to it. A lot of young people in South Africa had got it, and so there's a bit of mystery there, but we'll see how things develop this week. So again, be cautious and reduce your size as well. Try not to take on too many positions. Gimme shared the links there for the testimony for later tonight. And then we do have the euro with Jin here as well. And there's a little bit there. It's trying its best, the euro. So I'll pass it over to Jindicator now.
It's trying its best. I don't know what it's trying its best to do actually on the euro. When everything was dropping last week, we saw the euro climb. When we saw everything sitting in consolidation, we saw the euro sit in consolidation as well. The euro has been a little bit different to everyone else, but they are now in almost the same situation where we are seeing the Omicron virus variant in parts of the Eurozone. We are seeing a lot of news to be released for the Eurozone as well. So checking out the news here on forextradingasia.com economic calendar. Today being Tuesday, Lagarde spoke, but nothing big, nothing interesting happened there. What we do have for the rest of the day is the Eurozone CPI numbers across all the different countries. At this point, we don't pay that much attention to this. I'm sounding like a broken record, but we don't pay attention to all of that. Look forward to the 1800 hours CPI number month on month and year on year. 4.1%, previously expected a 4.5 inflation number for the Eurozone. Not a big surprise at this point, anticipated from the ECB because they have already somewhat factored in the high inflation rate. But with this is the previous data. I think this will change moving forward as the US have already said that, with the new variants, it might influence interest rates, it might influence, or the rate of interest rate growth, it might influence inflation and also the overall economic activity. I think that at 4.5 here should release about 4.5 as expected, with that anticipating some upside move towards the euro dollar with this news release. For the Canadian dollar, we spoke about this with the Traders Club members last night already, looked at it on the H1 and H4 time frame. So Traders Club members, if you haven't already, go check out the video. It's uploaded already. With that, we have Fed Chair Powell testifying tonight. Kim Hong's told you about that. The focus still on the euro dollar. On Wednesday, we have a whole bunch of Eurozone news. PMI numbers, pay attention. With all the different countries' PMI, and you can see no change expected on the manufacturing PMI numbers. So I don't think this will be big impact news. I'm not expecting an upset in these PMI numbers either. So Eurozone 58.6, well into the expansionary phase. Expected still in 58.6 there. Powell testifying again on Wednesday night. Then looking into Thursday, we have, well, unemployment rate for the Eurozone dropping from a 7.4 to a 7.3. Not going to move prices too much. And then on Friday, services PMI, same thing like the manufacturing PMI, no change. Not a big surprise there, but the non-farm payrolls will have that impact. It's likely to have that big impact. This might be I'm sticking my neck out and saying this, but this might be the last time we'll see a good number on the non-farm payrolls. If the new variant does impact the US economy significantly, then this might be the last time we see that before we see people staying home a bit more again, or we see more people leaving their jobs. So festive period, probably a big number. I'm anticipating. We ran the poll with our Traders Club members last night. At this point, I'm anticipating a greater than 550 number, right? With average hourly earnings at a 0.4 and an unemployment rate dropping slightly from a 4.6 to a 4.5. Expecting a little bit of a stronger US dollar towards the end of the week. But what this all means here on the charts is that looking at the euro dollar H4 time frame with the CPI number to be released, I'm anticipating a possible further upside move, possibly from this 1.13 towards the 1.14 resistance level. Remember, this is a zone, so I'm still looking for that move. Possibly, let's look for a little bit higher at about 1.1316. 1.1316. I'll keep a relatively tight stop loss at about 30 pips to a good 60, 70 pip take profit towards the 1.14 resistance level. But with that, I think that we're possibly going to see that move this week, early to middle this week, before, if we see that US dollar strengthen, come back into play with the non-farm payrolls, possibly that drop back down again. But first move, I think we might see it test 1.14. What do you think, Kim Hong? Sounds good? Gimme?
Sorry?
Testing 1.14, what do you think?
1.14?
Yep.
Wait, I can't see your screen. The numbers are too small.
Yeah, 1.14, this green line here.
Oh, okay. Testing 1.14.
He's not paying attention to me at all. He's just sending out messages.
I was paying attention to Bloomberg just now because there was a Moderna news.
I know. I saw you not paying attention. That's why I asked you that question.
What was the question again?
Do you think euro dollar with the CPI number at 4.5, if it does release at 4.5, we'll see it track upwards towards 1.14?
Wow, the current price is 1.13. Unlikely. My view, unlikely.
Unlikely?
Yes.
We'll see. I think it'll come up close. I think it'll come close, but then we'll see it probably trace back down again from that point.
It may move towards that resistance level, but if you want it to move all the way up there, it's unlikely because of the COVID Omicron variant that has been, well, there's actually more cases being found yesterday night in Eurozone area. So that may actually weigh down the positive impact that the CPI data may have on the euro. Nonetheless, yeah, we can actually expect some strengthening if, the actual data turns out to be 4.5 or higher. Okay, but yeah, I don't think the strength is going to be sustainable.
It'll come close. It'll shoot up towards that area, and then after that, sit there and come back down again.
Yeah, likely going to be stagnant, at close to that level, or just come back down straight because of the ongoing uncertainty.
So it might do something like it did 2 weeks ago, where it did that.
Yes,
start up there.
Exactly. You're going to see a long tail and whipsaws coming in and things like that.
Let's look forward to that, because if it does go up towards that 1.14, I would actually be more interested to sell it back down instead of trading it up towards that 1.14 resistance level, right? So with that said about the euro dollar, looking at the euro pound, it is sitting at 84.78, sitting at 84.78. We possibly could see that move up because of how the euro dollar is likely to move. We see that move up, but I think the euro pound is actually more likely to sit within this range, get resisted by that 85 level or the 84.97 level before turning back down again. At this point, what I would best suggest for the euro pound is to sit, to wait, and to look for a selling opportunity as it rejects any potential immediate resistance level coming up. So not a lot of trades to be firing out at this for this week or early into this week. I would say save that ammo, look into the non-farm payrolls, look into next week when we have a better or clearer idea of what the impact of this new variant is likely to have on the global economy. With that said, I'll pass it back to you, Scotty.
Thanks for that, Jin. And Sunil, with the US dollar looking gloomy, what is the probability for indices? And look, that's a very good question. I think what I'll do, I'll make a video about that a little bit later on, that situation. It's yes, that is a good question, but I won't answer that right here. I will follow up with that. And if anyone else wants any questions answered, make sure you hop into the LCMS Traders Club. All right, but that is today's episode. Thank you for watching, everyone, and I'll address that question straight away in the USD chat as well. And enjoy the day, everyone. Bye for now.